Hello everyone, welcome to Crypto Mobile Mining and Trading. I am Dixon and let me give you a quick real-time update. Big news is coming out of Africa today, specifically Kenya, which has just passed a landmark law that's set to shake up the entire cryptocurrency market on the continent. Kenya AS Parliament has officially approved the Virtual Asset Service Providers Bill 2025. This is a huge step forward in regulating digital assets and could position Kenya as a major digital finance hub in Africa. The bill is now on its way to President William Ruto to be signed into law. So what does this new law actually do? According to Kuria Kimani, the chair of the Finance Committee in the National Assembly, it establishes a clear legal framework for a market that has been expanding at an incredible rate. Instead of creating a brand new regulatory body, the bill cleverly assigns shared responsibility to two existing powerhouses. The Central Bank of Kenya, or CBK, will be in charge of licensing for stablecoins and other virtual assets. Meanwhile, the Capital Markets Authority, the CMA, will oversee the exchanges, brokers, and all market operators. This dual framework aims to bring stability and trust to the sector. Now, if you're a crypto operator in Kenya or thinking of setting up shop there, listen closely. The new rules are strict. You'll need to establish a physical office in the country and appoint a board with at least 3 people. Client funds must be kept separate, and you'll have to comply with Know Your Customer, KYC, and anti-money laundering regulations. Regular, independent IT audits will also be mandatory. The penalties for not complying are serious. We're talking fines up to almost $200,000 or even up to 5 years in prison. For businesses already operating, there's a 1-year grace period to get everything in order and comply with these new rules. Why is Kenya making this strategic move right now? It's all about attracting investment and providing legal certainty. The government wants to create a safe and predictable environment for both investors and innovative fintech startups. Kuria Kimani even mentioned that talks are already underway with major global platforms like Binance and Coinbase, encouraging them to establish a presence in the region. He said, and I quote, "We are hoping that Kenya can now be the gateway into Africa." This is a bold statement, but with this comprehensive framework, Kenya is joining the ranks of other pioneering African nations, like South Africa and Mauritius, in crypto regulation. This move also strengthens Kenya's credibility on the international stage, especially as it works to get off the Financial Action Task Force's gray list. Let's look at the numbers because they tell a powerful story. Cryptocurrency adoption in Kenya is exploding. According to data from AAA, nearly 6.1 million people, which is over 10% of the population, currently own cryptocurrencies. That's a massive user base. In the 12 months leading up to June 2024, Kenyans transacted a staggering $3.3 billion in stablecoins alone. This isn't just a niche hobby, it's becoming a core part of the financial landscape. A recent report from Chainalysis shows that the crypto market in sub-Saharan Africa grew by an incredible 52% year-on-year. A major driver behind this growth and the new law is the youth. Young people in Kenya, particularly those between 18 and 35, are embracing crypto for everything: payments, investments, and daily transactions. This reform is a direct response to that trend. Kenya is also leveraging its long-standing leadership in mobile money, thanks to the revolutionary M-Pesa platform, to smoothly integrate these new financial technologies. The country has a solid foundation for this digital leap, and this new bill is the next logical step in its evolution as a tech powerhouse. What are your thoughts on this? Do you think this will boost adoption even more? Let me know in the comments below. Of course, with any major reform, there are challenges ahead. The success of this new law will really depend on how it's implemented. Key details like capital requirements, licensing costs, and solvency criteria will need to be carefully defined. The goal is to find the right balance between strong regulation and fostering innovation. If the compliance rules are too demanding or expensive, it could make it difficult for smaller, local crypto businesses to compete and survive. This is a critical point to watch as the regulations are rolled out. Another point of contention is the requirement for a physical office in Kenya. Some critics argue that this goes against the very nature of decentralized digital-first businesses and could discourage operators who don't need a brick-and-mortar presence. We've seen similar issues play out elsewhere. In Nigeria, for example, Binance got into a major dispute with authorities over the lack of a local physical office, which led to the detention of two of its executives. Binance argued it had a significant economic presence without a physical office, but the situation escalated dramatically. This shows how tricky the physical presence requirement can be for global crypto companies. It will be very interesting to see how Kenya navigates this particular challenge. So what's the big picture here? Kenya is making a calculated and ambitious bet. By creating a regulated environment, it's signaling to the world that it is open for business and serious about becoming a leader in the digital economy. This law has the potential to unlock massive investment, protect consumers, and drive financial innovation not just in Kenya, but across the entire African continent. It's a development we will be watching very closely. If you have any questions about what this means for you as an investor or user, please drop them in the comments section. I'll do my best to answer them. And don't forget to subscribe, like this video, and smash that bell button so you don't miss any of our future real-time updates. Thank you so much for watching. My name is Dixon, and I'll catch you in the next video.